The Paycheck Protection Loan. I'm sure you heard a lot about it and you're probably wondering if you should apply or not. Well, in this video, I'm going to provide you with the what, when, how, why, everything you need to know about the Paycheck Protection Loan. Stay tuned. Hi everyone, Octavia Conner with Say Yes to Profits. Today we're going to discuss the Paycheck Protection Loan. Now I've broken this video down into several sections, so you definitely want to make sure that you're able to take notes. Or you can just watch this video several times. I don't mind. Section number 1, general information. The Paycheck Protection Loan is a part of the CARES Act. They've set aside $350 billion in government-backed loans for private banks to help small businesses survive during the coronavirus outbreak. Now, this is an emergency loan that can be forgiven when you use it to maintain payroll. The basic purpose of the Paycheck Protection Loan is to incentivize small businesses to either not lay off their workers or rehire the laid off workers that have lost their job due to COVID-19. You can apply for the loans through any existing SBA 7A lender or through any federally insured institution or any federally insured credit union. While the program is open until June 30th of 2020, the government is advising borrowers to apply as soon as possible because this is first come, first serve. So if they run out of money, you missed out. The interest rate for the Paycheck Protection Loans are set at 1% and loans mature after 2 years. And guess what? There is no personal guarantee or collateral required for the Paycheck Protection Loan. Businesses that are eligible. Small businesses with fewer than 500 employees. A small business with a maximum tangible net worth up to $15 million. And the average net income for a full 2 years prior to the application must not exceed $5 million. Also, 501c3 nonprofits with fewer than 500 workers, 501c19 veteran organizations, self-employed workers, sole proprietors, freelancers, and gig economy workers. What you need in order to apply? Well, there are a couple of things. You need your 2019 IRS Form 1099 miscellaneous if you are an independent contractor and it cannot exceed $100,000 for the year. You need a 2019 IRS 1040C if your business is a sole proprietorship. If your business is seasonal, a 2019 IRS Form 941 for quarter 1 and quarter 2. If your business is not seasonal, a 2019 IRS Form 940. You also need your 2019 IRS Form W-3. You need your articles of organization, your payroll statements from your payroll providers, your bank and routing number, as well as your 12-month profit and loss statement. Now, if you are applying with your bank, some of the banking institutions are not requiring you to have all of these documents. You only need to furnish one of these documents depending on your banking institution. How much can you borrow? Loans under the Paycheck Protection Act can be 2.5 times the borrower's average monthly payroll cost and cannot exceed $10 million. How do you calculate your average monthly payroll cost? Well, I'm going to provide you with 2 methods. Method number 1, you want to take the sum of your total payroll, but you have to exclude 4 things. Number 1, the compensation of any individual employee that is in excess for their annual salary of $100,000. You have to also exclude employer portion payroll taxes, any compensation for an employee whose principal place is outside of the United States, and any qualified sick leave. In method number 1, you take the sum of your total payroll, excluding the 4 things that I just mentioned, and that will equal your total allowed borrowed amount. Method number 2, for your maximum loan amount, you would take 2.5 times the average total monthly payroll costs incurred during 2019 or 1 year prior to the loan date. Now, there's a caveat. Any independent contractors cannot be added to your calculation. They have to apply for the Paycheck Protection Loan on their own. Is the loan truly forgivable? Yes, it can be forgiven or reduced. All a part of the loan you receive under the Paycheck Protection Program could be forgiven if you keep all employees on payroll or rehire them by June 30th of 2020. Payroll costs must be 75% or more of your approved loan amount. Only 25% of the amount forgiven can be used for non-payroll expenses. The forgiveness won't happen until the end of the 8-week period of employment following the receipt of the loan. Now, if you have any questions about the Paycheck Protection Loan, definitely leave that information below. If you need someone to help you gather your financial information and put together your financial statements for the last 12 months, give me a call. This has been Octavia Conner. Until next time, say yes to profits. Toodles.